Hey future homeowners, I'm John Werner with Mortgage and Credit Pro, where we make home buying clear, simple, and tailored to help you make smart financial decisions. Today, we're tackling two important topics that come up a lot. What happens to mortgage rates when the Fed lowers interest rates, and how does a government shutdown affect your ability to get a mortgage? Let's break it all down. First, what happens when the Fed lowers interest rates? There's a common myth that when the Federal Reserve cuts rates, mortgage rates instantly go down, but it's not that simple. The Federal Reserve controls short-term interest rates, like the federal funds rate, which affects things like credit cards, auto loans, and home equity lines of credit. Mortgage rates, however, are influenced more by the bond market, especially the 10-year Treasury yield. When the Fed lowers rates, it can signal that the economy is slowing, and that can cause investors to shift money into bonds. This increased demand for bonds can push yields down, and that often leads to lower mortgage rates. So yes, sometimes mortgage rates do drop after Fed cuts, but it's not automatic. The market looks at a lot of factors, including inflation, job growth, and over economic trends. That's why rates can sometimes move in the opposite direction from what people expect. Now let's shift gears to talk about what happens during a government shutdown. When the government shuts down, several federal agencies either close or reduce staffing. That might sound like it wouldn't affect your mortgage, but it definitely can, depending on your loan type and what stage of the process you're in. For example, if you're applying for a loan backed by FHA, VA, or USDA, a shutdown can cause delays because these agencies may not be able to process paperwork, issue approvals, or respond to the lenders in a timely manner. Even conventional loans can hit roadblocks if the lender needs to verify tax returns through the IRS or Social Security information during a shutdown. Those services might be delayed, which can slow down your mortgage process. The key takeaways in this is if you're already in escrow or thinking of getting pre-approved during a shutdown, work with a lender who knows how to navigate these delays. At Mortgage and Credit Pro, we prepare for a situation like this so you aren't left in the dark. So what should you do with all this information? If you're thinking about buying a home or refinancing and you hear that the feds are lowering rates, don't assume mortgage rates will drop right away. Talk to your lender, talk to us, so we can look at current bond trends and help you time your move right. And if you hear that the government might shut down, don't panic. You can still move forward. We'll help you plan, communicate with your real estate agent, and keep these moving as smoothly as possible. And hey, if you don't have a great real estate agent yet, let me know. I can connect you with someone who knows how to close deals even in a tricky market conditions. If this video helped you, please give it a thumbs up, hit that subscribe button, and share it with someone you know who's in the home buying process. I'm John Werner with Mortgage and Credit Pro. Thank you for watching, and I'll see you in the next video.